Joining can take one click. Canceling can send you through a maze. You open the app to cancel one service. Suddenly, you are resetting a password, digging through the help section, and trying to remember who actually billed you. That confusion matters because every person who delays canceling may generate another payment. Friction is not just annoying, it can be valuable. And the hidden button is only one layer. Free trials, automatic renewals, forgotten dates, and retention offers all push the same decision into the future. In May 2026, the Federal Trade Commission announced a proposed $35 million settlement with Shutterstock. The agency alleged that some plans renewed without clear enough disclosure, and before 2024, customers seeking early cancellation could not finish online. They had to contact support by phone, chat, or email. Shutterstock agreed to a proposed order requiring simple cancellation. One click can start the payment. Every extra step can protect the next one. Subscriptions are useful because they remove repeated decisions. Your music keeps playing, your software keeps working, your deliveries keep arriving. The convenience is real, but the same feature that removes a decision to stay also creates a decision to leave. With a one-time purchase, a company needs another yes before it gets another payment. With a subscription, yesterday's yes can stay alive until you interrupt it. That flips the default. Doing nothing used to mean buying nothing. Now, doing nothing can mean buying another month. And researchers have measured how powerful that can be. A 2025 study in the American Economic Review looked at what happened when payment cards were replaced. Suddenly, some subscribers had to actively renew. Cancellation rates were much higher. Using models built around that data, the researchers estimated that cancellation friction roughly doubled seller revenue on average, while holding the starting number of subscribers fixed. That is a model estimate, not a claim about every company, but it reveals something important. Forgetting has economic value. The clever part of card replacement is that it acts like a reset. The service and the customer's preferences may be the same, only the default changes. When fresh action becomes necessary, more relationships end. The results suggest that some subscriptions were surviving because no new decision was required, not because someone chose another month. Now look at the free trial. The word free gets your attention today. The deadline asks a different version of you to remember later. You sign up on a quiet Sunday. The renewal arrives during a busy Tuesday, mixed into email, errands, work, and everything else demanding attention. The service does not need a fresh yes. Your silence becomes the yes. The FTC calls this a negative option. Billing continues unless you take action to stop it. That system can be fair when the terms are clear and leaving is simple. Forgetting a clearly disclosed deadline is inertia. Burying the button or moving cancellation to a new channel is design. Both can produce another payment, but they are not the same accusation, because now you have to escape. First, find the account. Then, remember the password. Then discover whether you subscribed through the website, the app, your phone's app store, or some other payment system. Then, find the plan page. Not the help page, not the billing history, not the button that pauses everything except the charge. The cancel button becomes a tiny exit sign in a building designed around the entrance. No single step has to be impossible. That is the point. One more screen, one more password, one more survey, one more offer, one more "are you sure?" Each step gives ordinary life another chance to interrupt. Some friction is not a conspiracy. Old account systems, third-party billing, or real consequences that need explanation can create genuine complexity. But the customer experiences the exit, not the company's organization chart. And when an easy entrance repeatedly becomes a difficult exit, regulators start asking who benefits. And the maze is not imaginary. In a pending case against Uber, the FTC alleges that a cancellation path required at least 12 actions across at least 7 screens. The complaint says users could be pushed toward pausing or accepting an offer to stay before reaching the exit. Those are allegations in an ongoing case, not a final ruling. You rarely see a wall that says, "You cannot cancel." You see a series of doors that make canceling tomorrow feel easier than canceling now. Move that process to a phone line, and the task gets heavier. Now cancellation competes with work, errands, business hours, hold music, and the possibility that you get disconnected. The monthly price is no longer the full price. Your time is part of the bill. Then come the save offers. Pause for a while, take a discount, keep your benefits. These offers are not automatically bad. A pause may be exactly what someone needs. A discount may turn a bad deal into a useful one. The difference is whether canceling remains clear. If the exit stays visible, the offer is a choice. If every offer blocks the exit, the coupon becomes another locked door. New York City is about to test a simpler rule. Starting October 1st, 2026, its click-to-cancel rule requires covered subscriptions to let customers cancel at any time through a simple mechanism that is as easy as, and uses the same medium as, sign-up. It also prohibits unreasonable obstruction or delay. But that protection is local, not nationwide. The FTC amended its federal negative option rule in 2024, but a federal appeals court vacated it on July 8, 2025, because the agency had missed a required rulemaking step. That did not make subscription traps legal. The FTC still brings individual cases under existing law, but it left Americans with a patchwork instead of one national click-to-cancel standard. So how can you tell the difference between genuine convenience and engineered friction? Use the exit test before you enter. What will this cost after the promotion? What exact date does it renew? And can you see how to cancel before you pay? If the entrance is obvious but the exit is a mystery, that is information about the product. And when you do cancel, decide what you want before entering the flow. Cancel, pause, or accept a lower price. Those are 3 different decisions. Do not let a tired moment turn one into another. Then keep the confirmation. Because the hidden cost is not only the charge you forgot, it is the renewal date sitting in the back of your mind, the password reset you keep postponing, the phone call you have to remember during business hours. The subscription graveyard is a list of tiny, unfinished tasks, each with permission to bill you again. A fair subscription should earn renewal because you still want it, not because leaving became a chore. That is the system hiding behind the missing cancel button. It keeps yesterday's yes alive and makes today's no do all the work. The most profitable subscription may not be the one you love. It may be the one you forgot to leave.